your portfolio hailing a ride to new highs? Or is it maybe stuck in neutral today? We're diving deep into a company that really defines urban mobility, Uber. That's ticker UEER. We want to unpack the crucial insights from our latest research, captured this morning, September 16th, 2025, around 7:25 a.m. Eastern. Welcome to De-Risk, a podcast where we provide a no-nonsense analysis of stocks. Our mission today, to basically distill the most important nuggets from our research on Uber's current position and its future outlook for you. Okay, so let's set the scene a bit. Our research shows the broader market's kind of split this morning. You've got NASDAQ and S&P 500 futures leaning positive, maybe cautiously so.
But the Dow's lagging a bit.
Exactly. And it sort of mirrors the U.S. economy itself, right? We're getting these mixed signals. Decent GDP growth, sure, but then you see a cooling job market.
And those recession whispers popping up in about a third of U.S. states, according to the data.
Right. Plus, we've got key retail sales and industrial production numbers coming out today. That definitely adds a layer of uncertainty. So how does Uber's story fit into this, well, shaky backdrop?
Yeah, that's what's really fascinating based on our research. Uber isn't just sitting still. They're expanding aggressively, way beyond just ride-hailing. Think partnerships for air mobility.
Air mobility, wow.
Yeah, and a FinTech collaboration with Pipes.
Yeah.
You know, the platform offering working capital. They're doing that for restaurants now. Plus, securing licenses for bike taxis in Mumbai, launching discounted EV tires for London drivers. It's like they're building this whole ecosystem.
A mini ecosystem, definitely.
And Wall Street seems to love it. Our research shows 77% of, 54 analysts, they rate Uber a buy or strong buy. And crucially, 0 sell ratings, not 1.
That's pretty strong conviction.
It is. And our own valuation model suggests there might still be room to run. The free cash flow model puts fair value around 105 cents. The earnings-based model is closer to $98. And the stock closed yesterday at $98.85. So, it's right in that zone. But here's the big question, right? Can this really aggressive multi-front expansion keep driving growth? Can it justify higher prices? Especially when you've got regulatory pressures looming and potentially margin pressures in this kind of economy.
That's the core tension. So how much of that is baked into what investors are thinking right now? What's our research show about sentiment? What are traders actually, betting on?
Well, get this. Our research shows the options market is overwhelmingly bullish, like seriously skewed. The put-to-call ratio is just 0.25.
0.25. So for every one bearish bet, there are 4 bullish ones.
Exactly. That's remarkably lopsided. It tells you where the immediate money flow is betting.
Yeah.
And that $100 call strike, that's shaping up to be a huge psychological and financial battleground. Lots of action there.
And the safety net?
Looks like the $85 put strike has the heaviest concentration. That's where traders see some potential support, maybe.
Okay. And what about short interest, people betting against the stock?
Very low. Our research pegs it at just 2.46% of the float, which generally means not many big players are willing to bet heavily on a price drop. Strong underlying confidence, usually.
Okay, so sentiment is clearly bullish. How does that line up with the technical picture from our research?
It lines up pretty well, actually, the overall trend. Undeniably positive. Both short-term and long-term charts show that. You're seeing those classic higher peaks and higher valleys. That's bullish structure.
And volume. Is money flowing in?
Clear signs of accumulation in the volume indicators, yeah. More buying on up days. And momentum is accelerating too, which suggests the buying interest is sustained for now.
Okay, sounds pretty good. But you mentioned a wrinkle earlier.
Like the small wrinkle.
Yeah.
And it's why we're adding that note of caution. So the price just broke out of its recent trading range. That's typically bullish, right? A breakout.
Yeah.
But our research shows its average daily price swings, the volatility, haven't really expanded much yet. And maybe more importantly, a key measure we track for underlying trend strength remains surprisingly low.
Low trend strength despite a breakout.
Exactly. It suggests this breakout might lack, let's say, true conviction or explosive power. It makes you wonder about its sustainability.
Okay, so putting all these pieces together, the macro, the fundamentals, the sentiment, the technicals with that wrinkle, what's our research's overall verdict for Uber?
Based on everything, our overall outlook is cautiously bullish.
Cautiously bullish, okay.
The caution comes from, well, 2 main things. First, that shaky macro picture we talked about. A bad retail sales number today could easily, sour the mood. And second, that technical contradiction, the breakout, happening without a strong confirmation from underlying trend strength. It suggests some vulnerability if the market turns down.
Makes sense. And the bullish side?
The bullish case is strong. You've got that solid fundamental story, the clear expansion strategy that Wall Street is backing heavily. Extremely positive market sentiment, as we saw in the options and short interest, and the main technical signals trend, volume, momentum are largely flashing green, despite that one caveat.
So what are the key levels to watch in the immediate term?
The absolute key battleground for the next few trading sessions is that $100 level. It's psychological, it's where the actions are clustered. If we see a confident break above $100, that could really open the door towards that 105 table fair value target we mentioned.
And if it gets rejected at $100?
Then you'd look for support potentially around the $98 level, yesterday's close, and then maybe down towards $95.
And is there a point where this immediate bullish view gets invalidated?
Yeah, for this immediate thesis, a close below yesterday's low, which was $95.52, that would be our signal to reassess. That would break the immediate upward structure.
Got it. So for you listening, the big question is Uber actually heading to new highs, or are we just seeing some maybe temporary surge pricing around that crucial $100 mark? Watching that battle play out will likely give us the answer. That's all for this deep dive. Remember, this podcast is for informational purposes only and isn't financial advice. Always do your own research or consult with qualified financial advisors before making any investment decisions. Thanks for tuning in. Catch you in the next deep dive.